The economic slowdown caused by the coronavirus pandemic is stifling a federal program meant to spur new investment in low-income neighbourhoods. That's according to a recent survey from an advocacy group that backs the initiative. The Economic Innovation Group surveyed more than 100 investors and other people involved in opportunity zones, designated areas that offer tax incentives for investment. Created by the 2017 Tax Cut Law, the zones are aimed at attracting money and new businesses to poor communities. But the pandemic is putting some of that investment activity on hold, according to the survey of investors, Opportunity Zone fund managers and other people associated with the zones. Blake Christian is a partner with Holthouse Carlin and Van Trigt. Blake, first of all, welcome, and what are your thoughts?
Great to see you as always, Mike. Coincidentally, I was one of those 100 people surveyed, so I had a small part in those results. Just to put this in perspective, there's been 75 billion put in as equity into these opportunity zone funds. And what a lot of people don't realize is that is just a portion of what will ultimately be invested. Most people will add a debt element to their capital stack, certainly on real estate projects and operating businesses that also take advantage of the Opportunity Zone program. So if you just used a 4 times debt to equity ratio, you'd end up with about $375 billion, which is, and by my calculations, I think there's probably about half a trillion committed at this point in time. So, and again, to keep it in perspective, the final regulations didn't get inked for 2 years after passage of the act. And so naturally, and so that was late December 2019. So we're only, several months beyond that. And so it's natural that the money sitting in these funds and these articles and these analyses are that the money hasn't dropped into all of it hasn't dropped into physical projects, either real estate deals or operating businesses. But again, that's the way business works. And when there's uncertainty, it causes people to freeze and not move forward. And that's what we're seeing. The money is starting to move. Absolutely, I have been nonstop busy with Opportunity Zone projects all year. And so I'm much more optimistic than some of the articles. Forbes came out with an article similar to the EIG report.
We know that opportunity zones have attracted great interest from real estate developers and investors, but what opportunities are available to other types of businesses or entrepreneurs?
Well, again, any operating business, that's the beauty of the program, is it is extremely flexible. So you can start a software company in an opportunity zone, you can expand a business, you can even move your existing business into an opportunity zone and obtain these long-term benefits. In 10 years, you can sell your business, if you structure it correctly, and have no federal, and in all but 4 state cases, you can exempt your state gain from taxation also.
For holders of investments where, say, partnerships have broken down or you may just want to walk away, can opportunity zones offer greater flexibility in this circumstance?
Yeah, absolutely. And people, word has gotten out there about the power of this program. And so a lot of people, and there's a lot of capital gains, a lot of people changed up their portfolio mix when we had, when the pandemic first hit and we had the huge drop in the stock market. A lot of people cut down their equity balance and took gains that they had from multiple years of appreciation. And so there's some very large gains that need to be sheltered, and this program is perfect for that. And also, it's fine for the patient investor because you have a fairly long, glide path to reinvesting those proceeds. Because of COVID, Treasury issued IRS notice 2020-39, which allows you up to 55 months to deploy the cash that you put into an opportunity zone fund. So again, there's not a huge rush to to start digging your foundation for your real estate project, and that's what we're seeing. It'll take a little time for the program to get traction, but the money's sitting there ready to go.
Can an operating business start, purchase or move their business into an opportunity zone, and what are the the potential benefits?
Yeah, so so let's just say a business that's been operating for a few years is outside the zone, but the owner has a capital gain to roll into the business. They can physically move that business either into a rented facility, or they can buy the property. And then by as long as they invest 233% more than the tax basis in the property that they moved into that zone, then they can generally meet all the tests for qualification. And then after waiting 10 years, they can sell that business, and any appreciation above what they invested into the business is going to be tax-free.
I think the opportunity zones are just fabulous for disadvantaged areas, but are you aware of any opportunity zones that are not in disadvantaged areas, and what sort of problems do you think would emerge?
Yeah, that is one of the criticisms of the program, and what they did is they left they laid out criteria for what census tracts, and census tracts are usually about 10,000 people population, and so they're very irregular. They're not a square. They're very gerrymandered how they're laid out. But what they did is they left it to the governors, and they said they would usually give them about 4 times the amount of census tracts to pick from, but they had to narrow that down to one quarter of that number. And so they took they with some input from the mayors and other elected officials and economic development people, they picked the census tracts that they felt were going to be the most impactful. There was also some fine print in the code that allowed those governors to pick an adjacent census tract to an economically challenged census tract, and for some synergy. So that's where the criticism comes in, is that some wealthier neighborhoods were pulled in to get some synergies to redevelop a broader area. I don't think they'll make that mistake again. There was logic for doing it, but that's where the criticism comes from.
November 3 is looming. It's probably more fun than Disneyland at this stage, except we have to wear masks. Have both presidential candidates, Biden and Trump, indicated greater support for or changes to the program if they won the election? And before we get onto that, I was just reading about that if there is no result by January, we could have President Pelosi. Interesting.
Yeah, that's that should encourage people to vote, right? Well, let me remind your listeners, viewers, that President Obama actually developed this program under his administration. It just so happened to pass with a lot of support from from Trump and the Republicans. But it's a very bipartisan bill, and again, a very, very powerful economic development tool. And so both Biden, who was part of the Obama administration, obviously, as well as Trump, are big advocates of the program. Vice President Biden has come out and on the record and has said that he would make some minor tweaks to it. He wants a little more transparency. He wants Treasury to do some studies to make sure that the residents in those neighborhoods are being positively impacted, like the program wants. And so he's fully supportive of it. The only negative is that he has talked about increasing capital gain rates for taxpayers making more than $1 million, and so the program defers the tax on the gain that you reinvest into the program, and that will be reportable in 2026. And so some clients are concerned that they may be deferring taxes at a 23.8% rate and end up having to pay a higher rate. I think there's a good chance that will get grandfathered and we won't have that bump in rates. I don't think Joe Biden really wants to punish people that have already put money into this program. And it won't be the rich people that'll be complaining about it. It'll be the governors, mayors, and city council members who are going to see money pulled out of the projects that are on the drawing board. So I do not see, I think it's going to be a wash which president gets in on the program. I think it'll survive just fine.
Interesting times ahead. You might say it's quite taxing, which is right up your alley. So pleasure always chatting. We'll do this again next week. Blake Christian from Holthouse Carlin and Van Trigt, which is HCVT.com. How's that, Blake? Thank you very much.
Perfect. Thank you so much.